Maneko 64, home of alternative economics and contrarian views. Today, our guest is John Rubino. John is a former Wall Street financial analyst, and he's the co-author or author of 5 books, including The Money Bubble, What to Do Before It Pops, and Clean Money, Picking Winners in the Green Tech Boom. He also founded the popular financial website dollarcollapse.com in 2004, and he sold it in 2022. Now you can find his work on Substack. Just search John Rubino's Substack. John, welcome back to the channel. How are you?
Hey Mario, great to talk to you again. It's been a while. Hey, I should start by apologizing for my voice here. Just before we started, I took a big handful of vitamins, and one of them didn't go down the way it should have. So now I'm kind of stuck with, a slowly dissolving tablet in my throat. So that's why I sound the way I do. But I think I can pull through and be okay.
Yeah, and we're gonna talk, and we probably will, but about de-dollarization and gold and silver and all these things, the U.S. economy. But you told me that you wanted to touch upon what's happening uh, domestically in the U.S., like political wise, which is worrying. And yeah, so I'll let you.
Well, it's really global rather than domestic for the U.S. because if you want to look at the kind of chaos that we're devolving into, you have to start with the wars that we're involved in all of a sudden. 3 years ago, we were really not involved in any wars out there, at least not any shooting wars. There were occupations and things. But now we've got Russia, Ukraine, which is still ongoing, and there's still a debate whether we should continue to fund our proxy army over there. And we've got Israel and Gaza now, and we just started bombing Yemen. So we're fighting everywhere now, which is kind of a late empire thing to happen. When your borders start being encroached on by people in every direction, and you find out you don't have enough money to cover the cost of maintaining your empire, that's when you collapse. But so we've got domestic stuff going on now that I think is kind of an adjunct to this, where all right, I'm going to give you my interpretation of this. It looks like it's the party in power right now in the U.S. It's their policy to open the borders, flood the country with new immigrants who tend to vote Democrat, and in that way reshape the political system for a whole generation. And a lot of border states are really suffering from this deluge of new people coming in, and they've lost patience with the federal government. So Texas now basically set up a big barbed wire barrier across part of the border where a lot of people were coming in. Um, the federal government sued Texas over this on the premise that the borders are the federal government's domain, not a state's. And they won in the Supreme Court, but Texas is just basically saying, no, sorry, we're going to keep that, the border wire up, and we're going to add to it. And now, something like 25 other states just announced that they're on Texas's side in this debate. So I think part of what's happening now is just the exasperation with open borders that the border states feel. And part of it is that they view the Biden administration as weak and that they can actually get away with standing up for what they perceive to be their best interests and their rights. And so it looks like they're going to do it. So we might, in the not too distant future, have U.S. soldiers standing off against state soldiers of some sort, either the police or the National Guard or whatever, on American soil, and that
Yeah.
just adds to the chaos,
That's a dangerous situation. I mean,
yes.
you never know. Here in the UK, we also have our border, our marine border, people coming in boats and in inflatables, dinghies, Zodiacs into Dover, the south coast. But unfortunately, the counties here don't have that much power to stop it, and they're not doing anything about it either. And it makes you wonder. It seems to be something that the Western countries are doing. You think it's because these people are going to vote Democrat. That could be it. Also to change the culture of the country, because these people don't speak English. They don't know the history of the U.S., the culture, and the same thing here in the UK. Yeah, it's worrying, and let's hope there isn't anything like a war. Even though I don't know if you've heard of Charles Nenner, his forecast for war is more of problems in the U.S., domestic problems. So he might be right, but as if that wasn't enough, John, could we talk about then de-dollarization and how, I mean, this could even impact de-dollarization. Why would foreigners want to keep their capital, their investments in the US while there's like a civil war, right?
Yeah, well, that's a good segue, because de-dollarization is a big part of this story. But question first, though, wasn't Brexit about the UK getting control of its porous borders, and gaining some control over immigration? And are you saying it just that didn't happen, and you're kind of right back where you started before Brexit, or
Well,
is
the
something
thing
different at
about
work?
Brexit is that it stopped uh, EU citizens being able to come here easily, and it stops UK citizens, for example, from going to France and working there easily. But it did not stop them bringing, or allowing these refugees from North Africa or the Middle East coming in. It's completely different. But yeah, it has stopped which I would say the good kind of open borders, between Europeans and the UK, which was good. I see that people now here in the UK. I know someone who's had a house in Spain for 20 years, and they can't stay there more than 90 days for tax purposes anymore because of Brexit. So yeah, it has affected immigration within the EU and the UK, but it seems like they want to punish the general public. Oh, you didn't want the be part of the EU. We're going to bring in all these people from the rest of the world into your country. That seems to be the punishment, in my opinion.
Okay, well, you know where this leads, of course, is to populist candidates winning everywhere because in every major country, there's a clear majority of people who don't want open borders. They want fairly strict controls on who comes and goes, or who comes at least. And that's a political platform. You can run on reinstituting fixed, closed, under control borders and win. And it's happening everywhere now. The Italians have elected a more or less populist government. The Netherlands just did that. Germany, the second most powerful or the second most popular political party now, is what an American would call populist and what Europeans call far right, but basically the same thing in terms of the border. And then Argentina elected a guy who's like a mix between Ron Paul and Donald Trump, from our point of view here.
Yeah.
And there's no end to this as long as there's no end to open borders. So that's where we're headed, a totally populist world, which, since populism isn't an actual political philosophy, it doesn't lead necessarily to any policies other than a closed border. We'll probably get chaos because we'll have different people interpreting populism in different ways after they get elected. But I think that's our future, and it doesn't look like there's any way around it.
Yeah, and so what about de-dollarization? How do you think that could be even more increased if there is some kind of conflict in the US?
Oh yeah, absolutely. So de-dollarization operates on several tracks, and one is the US has clearly abused the privilege of having the world's reserve currency. We basically weaponize the dollar, and we stomp around the world, picking fights with everybody in sight, financing our wars with borrowed money because we can, because everybody wants dollars, and then threatening to kick anybody who disagrees with the U.S. empire out of the SWIFT International Bank Settlement System or the IMF, or we're right now debating whether actually that's a U.S. UK thing that's going on now, where we're debating whether to confiscate Russia's monetary gold, right? Because I think they have gold bullion in Europe or in London,
Maybe a bit,
and
but and
yeah,
also the 300 billion in reserves as well in total.
yeah, that's
Yeah.
that. Okay, that's what I was thinking
Maybe
of,
there
and
is a bit of gold, but I don't think there's much. But it's
uh,
probably more like US treasuries, maybe some European government bonds as well.
okay, but so if we do that, we take that money away, then everybody else in the world is going to look at that and think, wow, could I be next? I better take my money out of the Western banking system. And so that's partially driving the BRICS thing, because a growing number of countries want to be able to trade without reference to the dollar. And so Russia, China, India, Saudi Arabia now, and a bunch of other countries are, in a union that hasn't done a whole lot yet. They've built some institutions that are kind of replacements for the World Bank and the SWIFT system and the International Monetary Fund. But it's not a major deal yet in terms of world trade, but it's growing. There are a lot of bilateral trade agreements being cut where Russia and China, for instance, trade in their own currencies and don't use dollars. Saudi Arabia is apparently now going to start taking other currencies for oil instead of the dollar. So it's happening. It's not a kind of thing where by next year it'll come to its conclusion, but it's happening in baby steps that are going in the direction of a big part of the world just dispensing with the dollar. And that's a huge deal, obviously, for the value and the utility of the dollar going forward. And it's not going to happen right away, but we're heading in that direction, and that's a serious deal when it does come to fruition.
Yeah, so let's skip over now to gold and silver and also the silver miners. I mean, they haven't done well. And even silver, the bullion hasn't really done that well, even though gold is holding up above 2000. So maybe if you want to touch upon that.
Yeah, gold. It's an interesting story technically with gold's price because it spent 3.5 or almost 4 years bouncing off of 2000 as resistance. In other words, it would get right up there and then it would get smacked back down. And so finally it broke through 2000 and it's hung in up there for a while, such that 2000 could now be support. It did get down towards 2000 just lately and then it bounced back up. So that's a big psychological deal if it happens. If it stays above 2000 and people start accepting that that's kind of its new trading range, that's obviously good for people who've bought gold in the past, which is to say almost everybody, because we're not far from a record high right now, in dollars at least. And it's very good for the gold miners because that means everybody will be able to take that, 20,020 or whatever price, call it long-term price for gold, and then use that in their models for what kind of cash flow the miners are going to generate. And it'll be higher than back when we were using 1800 or whatever. So I think that's a good thing for the prices of the gold miners, which by implication is a good thing for the silver miners because they would get pulled along with gold if the gold miners got revalued for a higher future cash flow. So, gold staying up where it is a good thing. And then once that's established, once we decide that, okay, 2000 is resistance and it's going to bounce off of that for the foreseeable future, then we start looking at, or I'm sorry, 2000 is
Support.
support.
Yeah.
Yeah, then we start looking at what's resistance. And, if it breaks through 2100, I think 2500 is very easy as the next resistance level. So that could be technically good for gold. Now, fundamentally, the picture for gold and silver are both phenomenal. You got the central banks of the world now net buyers of gold and aggressive net buyers. And so they're taking 1,000 tons a year off the market and putting it into their foreign exchange reserves. And in a 4,000 ton market, which is about what comes out of the mines now, that's a very big deal, especially when, 10 years ago, the central banks were net sellers. So just that alone is a big deal. And then, of course, you've got all the massive debt increase, massive money creation thing going on all around the world, which is the basic precious metal story. We're actively destroying the major fiat currencies, and that's going to be good for gold. So in the long run, there's nowhere for gold to go but up. And in the intermediate term, the technicals look pretty good. So I think that gold is near its all-time high, but the miners are very cheap relative to gold. So I think the miners are in a place where it's possible that we'll look back 3 years from now and go, "Oh my God, I should have mortgaged the house and bought the junior silver miners or whatever." It's completely possible that that's where we are now. And I think we should, when we're trying to decide how to allocate capital, we should keep that story in mind.
It's interesting that you note that about the miners and the price of gold because maybe the market or investors weren't too confident because gold was like you said getting to 2000 and going back to 1800, sometimes 1600, and maybe that's why they weren't confident to go into the miners. But now, yeah, like you said, if we stay above 2000 for a good period of time, that will change. I don't think we've gone below 2000 in 2024. And hopefully I haven't really jinxed gold. Maybe next week it will, but maybe you could also tell the viewers the difference between, the miners, what kind of companies they are, and how well they do. Uh, like the junior miners, the intermediate, and the big miners like Newmont. What's a lot of people don't know the difference, like junior exploration. I think, yeah, if you could tell us a
Sure.
little bit about that.
Well, miners come in all shapes and sizes. And in the gold mining business, there's a handful of just majors, really big gold and silver miners like Newmont and Barrick and Agnico Eagle and a handful of others that in terms of market cap kind of dominate the industry. But they haven't done very well over the last few years. And part of that is because mining is becoming a tougher business all the time. You've got, until very recently, extremely high energy costs, and mining is an energy intensive business. So that was expensive for them. Labor, and in the mining industry, it's really hard to get good people without paying way up. And so wage costs are up too. So you need a much higher gold price than in the past in order to offset the costs that have gone up in order to make these big miners dramatically more profitable than they have been, which is, basically the investment thesis. You want rising earnings, right? And copious cash flow and stuff like that. And that could come for reasons that we talked about. If gold stays up, then their cash flow will be higher. But lately, they haven't been great investments. Excuse me. Actually, nothing in the precious metal space has been a great investment lately. But one business model that kind of sits apart within the mining industry is the royalty streaming companies. And they're kind of sort of financiers of the mining industry. They'll go in and say, okay, I see you're trying to bring this new mine online, but you're having trouble getting financing. Well, let us give you $50 million to get the mine up and running. And then after that, you give us 2% of whatever the mine produces. Yeah, okay. And these deals take all kinds of different shapes, but that was kind of a generic one that I just gave you. And so the royalty companies then they don't have a lot of people because it's not very labor intensive to do what they do. So their labor costs aren't very high. They're considered generally good credits, so their financing costs aren't crazy high. And they're getting, if they do multiple deals like that, they get multiple streams or royalties. Those are two different things, but for our purposes, we don't have to define them. We'll just say that that's money coming in for these companies. So they end up making a lot of money in good times, and in bad times, they're reasonably well protected. So that's even though their stocks haven't done that great lately either, their business model protects them from a lot of the issues in mining. And I would say that if you want exposure to gold and silver equities, you could just buy a representative list of the royalty streaming companies. That's all you really have to do. You got exposure, and you have limited your risk, and you're going to benefit when gold and silver go up. But below these guys are, they're mid-tier miners of various shapes and sizes who, they're producers in most cases, but maybe they only have one or two mines. So they've got some risk, specific mine risk, but they're also really cheap. So the ones that are generating cash flow right now are fundamentally really interesting because they can use that cash flow to pay off their debt, to buy back stock, to raise dividends and things like that. And they're also takeover candidates. The big miners can snarf up a mid-tier without really breaking a sweat. And if the mid-tier is doing very well and in some way complements the properties of the big miner, then it's a logical deal. So you see a lot of mid-tier miners get taken out at nice premiums. So, that's generally speaking, a good sector as long as you buy the highest quality parts of that sector. And then further down, you get, developing companies that are taking a mine from discovery through exploration to actual productions. And once they become producers, they get revalued and they get more valuable. And then the explorers, which are the little guys, are miners who are scoping out a property, drilling it, figuring out what's there, usually with the idea of once they've proved it out to sell it at a really nice premium to a bigger miner. And 90% of them are going to go bankrupt. They'll disappear without a trace. 10% of them are 5 and 10 baggers. So the key with that sector is to figure out who's the winner and who's the loser there. And I have a list of them on my Substack newsletter, with the idea that as we watch their drill results, we'll be able to tell who's building a legit project and who's not. And there's a handful of them that are just reporting week after week phenomenal drill results, and they're clearly proving out a property that is going to be worth a lot of money to big miners. So when you find one of those, there was a version of this kind of business model a few years ago called Great Bear Resources in Canada that did that. They had great drill results. They basically proved that they have 5 to 10 million ounces in the ground, very accessible, right near a highway, right near power lines, right near water, and they got bought out at a nice premium. They went in the time I was watching them. They went from 39 cents a share to $23 a share. So some people made life-changing money on that deal, and so if you're looking at explorers, basically you want to know who's the next great bear, and that's the thing that everybody in this space is speculating about. So, and I think there are 3 or 4 potential candidates out there, which makes that a very exciting sector right now.
Yeah, and people can find out about that on your Substack.
Yeah, it's rubino.substack.com. And there's a lot of free stuff there. So you can come sign up for free and scope it out. And the actionable stuff, which is the meat of the newsletter, is behind a paywall, but a cheap paywall. You can see it for $5 a month. And there's a lot of stuff like that. I have a portfolio that includes a lot of good gold miners and a lot of explorers, and then the uranium stocks and the oil stocks and the
Oh yeah,
and
uranium. We can talk about uranium.
yeah.
Yeah.
Yeah,
Sorry.
no, that's okay. It's
Yeah.
basically I have some sample portfolios of commodity stocks that ought to do well going forward in what should be a commodities bull market over the next decade. But uranium has really been the bright spot in the commodity space for a pretty basic, straightforward story. The world gave up on nuclear power a decade ago and then changed its mind 2 years ago. And so now all the nuclear plants that were mothballed and all of them that were taken out of the pipeline or coming back into the pipeline are going to be built. And so we're going to have this surge in nuclear power over the next decade, which has to be fueled with uranium. And there's nowhere near enough uranium coming out of today's mines. So if you've got a viable deposits, or if you've got an actual working uranium mine, you became much more valuable in the last year. A lot of the uranium stocks are up by 50 to 100% in the last year. And this looks like a story that has legs. So there might be a correction in the short run, but it's still an excellent fundamental story for another decade at least. So uranium is something that if you're in commodities, you definitely have to own some.
Yeah, I've done a few promotional video for some uranium miners and also a uranium royalty company in the last 18 months, and they've done quite well. Interesting sector. Um, John, have you got any opinion on the great taking? Seeing that we're talking about investments here. And I know when you talk about the miners and everything, you're not telling, people to put all their savings in the miners, but is that something you worry about? What David Rogers Webb, I assume you've seen his book,
Mhm.
talks about, and what would be your course of action to protect against a potential scenario like that?
Well, I'm not a tax law expert, so I don't have an opinion about whether he's right or not about the changes that have happened lately. What I've been doing is tracking and posting excerpts from what other people have written as they look into the Great Taking. And a lot of very smart people think it's a real thing. So it's definitely something to pay attention to. I kind of think of it as first of all, it's totally in character with the people who are in charge of the world right now. It wouldn't be a surprise at all if
Mm.
they came up with some loophole that in the next financial crisis allowed them to confiscate everything that's in our bank and brokerage accounts. Um, I don't know if it's actually going to happen, but I think it's another data point for us to consider when we're trying to decide how to allocate our capital between financial assets in brokerage houses and banks and real assets in terms of gold and silver stored at home, gold and silver stored in super safe vaults in good jurisdictions, and farmland and other kinds of real assets. So I think to the extent that a lot of smart people think the great taking is potentially the real deal, that should cause us to increase the percentage of our capital that stays outside the financial system. I still have brokerage accounts. I've still got money in the bank, but I'm actively looking at things that maybe don't fall under the great taking confiscation regime when and if it happens. So yeah, we should definitely be responding to it at least that way. It's one more
Yeah.
reason not to trust the financial system.
Yeah, so just to wrap up then, if you could give us your opinion on the World Economic Forum, the globalists, do you think they're going to succeed with their Agenda 2030 and the climate change, net zero, and CBDCs?
I think they're actively trying. And they've had it their way for such a long time. I think they've gotten incredibly cocky because they say the quiet part out loud now. If you listen to what these guys say, they're actually saying, listen, we're going to take everything from you and you're going to be literally eating bugs. We literally say you're going to own nothing and be happy. And we're literally going to censor everything you say that doesn't fit with the global empire's program. So they're getting a lot of pushback finally. Those they're an explicit target for a lot of the populist politicians who are running and winning now. And at their most recent meeting, they had a bunch of people come in and talk to them who basically told them to F off from the stage, just pointed out that they're the problem with the world, not the world, and they're not the saviors of the world, and so I think it's possible that they've pretty much reached the peak of their influence. And what will tell the tale is what happens in the next crisis, because obviously they're going to try to use the next crisis to increase their power at the expense of everybody else. And we'll see if they succeed, A world with a President Donald Trump or Vivek Ramaswamy and Italy run by populists and maybe even Germany run by populists is going to be a tougher nut to crack. than the current world. So we'll see. But I think, you know, global civil war is something we should never hope for, and that's a long shot of possibility. But I think it has become a possibility now where, you know, in the US, gun sales are at record levels. We're kind of, you know, based on our actions, we're gearing up for something like that. And it wouldn't be a surprise if it became very contentious as the people who are currently in charge try to increase their power and other people stand against them. So we'll see. But you know, here's hoping that everything is resolved peacefully and individual freedom is preserved, et cetera, et cetera. But you know, as they say, hope for the best, but plan for the worst.
Great. Thank you, John. I wish you a great weekend, and hopefully we'll talk again soon.
Thanks, Mario. Great talking to you.